All right, so we're starting to get pretty close to my target here, which was the 200-day moving average. And you don't have to wait until a price exactly tags this um, before you start to take profits. In fact, my advice would be to start taking partial profits on some of your positions, now, and um, continue on maybe on each up day until we hit this, or until we get something that maybe looks like a reversal that's going to start to move down into the daily cycle low. Sometimes these targets, they'll come up a little bit short. Let me show you gold. All right, here's the gold market. So we've got a target here at 1800. Um, that was that triple top, and let me see if I can widen the screen and show you that. All right, so here's a wider screen. So we've got this triple top here at right around 1800. That's the obvious resistance zone. Um, I think there's a lot of people, and let me switch this back to daily. Um, I think there's a lot of people anticipating that gold is going to hit that 1800. And that was my expectation here, is that we'd get a little, early selling here as we got close to that resistance. Traders that maybe had bought down here at that point had figured, they'd made enough money, no sense in continuing to press their bets, on the, you know, there was a chance that it could come up a little bit short and then it could get caught in a correction. So they, traders took our profits early. That's what caused this initial move down. And then the expectation would be that the buyers would come in, buy the dip, and then we'd get a full test of 1800. But that doesn't always play out. Sometimes price just doesn't quite make it to the target, and longs that are pressing their bets in anticipation of a full test, they get caught in a daily cycle correction. That may be what's happening here in gold. It is um, back below the 10-day moving average. I'll put that on there for you. So as you can see here, gold it's holding below the 10-day moving average, which is a warning sign that maybe this was the start of a daily cycle low, and we might not hit that 1800 resistance. And if there's a lot of longs in here positioned for a tag of 1800 before they sell, and I've warned traders, I warned my subscribers to at least take half profits up here, just on the off chance that the bullion banks, stop. We had some attacks the other day. That was a warning sign. Uh, it may be possible that the bullion banks, which are still stuck in that large short position, if they can prevent gold from getting up to 1800 and catch all of these longs on the wrong side of the market, then that's going to be fuel to drive um, more selling. If this does turn into a move down into a daily cycle low, all of those longs that are positioned for a move to 1800 could get caught, and then their stops triggered, and that could cause at least a minor selling panic in the metals. So there's always the potential that a target maybe comes up a little short, doesn't quite get there. So moving back to the S&P. All right. So the 200-day moving average is the obvious target. At some point, there's going to be some selling here that may give us a 1 or 2 day pullback, or it could start the daily cycle low. We're on day 26, so we're starting to get mature. I don't really think it's going to top before day 30, but it could. So we've been long since way back here. So it wouldn't be a bad idea to start taking some profits here. We're getting pretty close. I mean, there's only a few percent left in this move. That is assuming a full tag of the 200, and every day makes it more mature in the daily cycle, and the risk increases that the cycle might or could top a little prematurely before it hits fully tags this resistance zone. So my advice at this point is, you can start taking some profits on every up day here, and then when we do get our move down, as I said in my last video, most daily cycle declines will retrace at least back to the 38% Fibonacci. And if we get up here and tag the 300, then a 38% retracement would be all the way back down here to about 2,700. So that would give you a better buying opportunity. It would reset the cycle count, and, instead of being on day 26, 27, 28, whatever, and at risk of the cycle topping maybe a little bit earlier than you are anticipating, then you could potentially get in on day one and have a lot more potential and a lot less risk ahead of you. So, probably not a bad idea to start taking some profits on your positions here. We're getting pretty close, probably close enough, especially if you've been following my advice and you got in way back down here when the cycle bottomed. You got some very nice profits in your stock positions. It's not going to hurt anything if you miss a couple of percent um, between here and a full tag of this 200, whereas there is some risk that it could top a little bit prematurely. We have the FOMC meeting this afternoon. I don't really think I think it's going to be a non-event. I don't think the market will pay any attention to it, but there is a small chance that it could be a trigger event to turn the market back down. I tend to think a more likely trigger event would be the employment report next Friday, but still, I'm going to say maybe a 20% chance that the FOMC meeting today might turn out to be the trigger event to cause this daily cycle to top. So I wouldn't be afraid to start taking some profits here, and then just put some kind of trailing stop on the rest of your positions.